Welcome to the Coverage and Coffee podcast. My name is Caspar Harsey. Joining me today is Harsh Chandnani. And today we're talking claims.
Yep.
I'm going to test you again. You ready?
Yeah, let's do it.
What did we do last time?
Deep fakes.
Yes, we did. It's a quite interesting topic today. We're talking about claims, which we've touched on this in many different episodes, just, slightly. I think once I even shut down Mo on a question in the past where he wanted to dive into claims, but it does kind of need its own episode. I think that there's a lot within the claim space. I mean, what are claims? Let's kind of start there. Claims is what you pay insurance for at the end of the day, right? So to submit a claim is when you think something has happened. So we'll go back to the classic example I always use. Your house is burnt down. You reach out to your insurance company. You tell them your house is burnt down. You expect to be paid back. That is what a claim is, right? You are issuing a claim on your insurance policy to be paid out for your insurance policy. So in reality, this is really what you're paying your premiums for, right? There's no other real purpose for getting insurance other than getting your claims paid.
Yeah.
And claims is, as we talked about with the car example, Harsh and I talked about with the car example, is confusing and can be a very difficult process. And today we're going to be talking high level about what the process could be, what it kind of looks like in different scenarios, what technology has really done for it. And then we have a handful of examples, some of them kind of honestly a little bit scary in terms of how they kind of worked and operated, some of them a little bit more classic or what you expect. Have you ever submitted a claim on anything?
Not me, no, not personally. I haven't had the need to. So
yeah. There's a great statistic that all the insurance companies often pays out. We've talked about this in some of the first episodes in terms of the mindset towards insurance, the mindset towards, that relationship that most people have with claims. And that is that idea that claims always get denied, right? Like you make a submission, you get it claimed. But the statistic, at least that a lot of insurance companies will put out there, is that 97.9% of claims are actually paid, right? So most insurance claims are paid. Now, I have a feeling that there's probably a couple, insurance likes to be very specific with their wording. I have a feeling that there's a couple asterisks here, right? You don't consider it a claim if it was out of scope, right? These are things, I think the stat is probably kind of saying that these are, valid, 97% of valid claims get paid. And that means that there's actually 2% of valid claims that don't get paid, right? But then we get into the definition of what is a valid claim, right?
Yeah. Because I was also reading up on this. It's kind of like they've termed it a denial debate.
Yeah.
And they basically were talking about why do these insurers not pay out the claims? What is the reason behind it? It could be anything to do with exclusion or maybe misrepresentation. Maybe, and like you mentioned, wording is really important, right? So what happens when a claim is not paid out? Do people usually go ahead and kind of
Yeah, I mean, I assume there's an appeals process, right? And when we're talking about a stat like 97.9%, I wonder if that includes the ones that went through appeal or the ones that ended up suing, right? There's also some cases of claims that, from years and years ago that are still being sorted out. And does that count as like in limbo, right? Are they kind of hoping the other person stops caring?
Yeah.
Does that count as a paid claim or not? But before we kind of dive into any specific examples, some of these that I think you'll find quite funny, some of them, like I said, will be kind of scary to think about, but we'll go through a couple high level scenarios, right? So I've split this into the best case scenario, the worst case scenario, and then the typical type of scenario that most people face, right?
Mm-hmm.
We'll actually start with the best case scenario. And this is quite interesting. I think we actually saw this guy speak at a conference, but Lemonade, do you know this insurance company?
Lemonade, the insurance company?
It's a personal lines insurance company. They're rather new. One of the things that they do is bike insurance, right? Okay. And they have this AI system that you hop on the app and you explain things verbally, right? Because they're also looking at tells to see whether you're lying, right?
Mhm.
And you give evidence and you describe what's happened. And apparently they hit a 2-second claim process. So someone's bike was stolen, they made this claim, 2 seconds later it was approved and they were getting paid out.
Oh
Right.
wow.
Now
Okay.
there's always delays when it comes to actually paying out. That's mostly banking type stuff than it is actually claims related stuff. That doesn't actually fall into the timelines that we're saying today in terms of how long does it actually take to get paid. It's when the claim is settled and they agree they need to pay you. But yeah, 2 seconds to get a claim paid.
Do are parametric claim payouts even that quick or?
They're not actually that quick. And we will be talking about some parametric
Yeah.
ones. We had an episode on parametric and we kind of said that, they're paid out immediately, right? But there
Mhm.
is actually still a little bit of a adjustment process in terms of figuring out, right? Like, let's say we go back to that weather example and we see, okay, yes, there was 10 millimeters of rain. They're going to cross-check that with other sources. They're going to wait until the full period is complete type stuff. There is still that like final approval. They don't just have a system that automatically sends out the money.
Okay.
But typically, I think when we're talking about the parametric example later, that does actually include, when I say it's like 13 days or something, that does include the amount of time it takes for the money to actually hit their account, right?
Okay.
But when we're talking about claims traditionally, we don't actually include the amount of time post claims being settled.
Mhm.
The worst case scenario is then, one of the worst case scenarios is that it then takes years, right? It takes absolutely years, or for whatever reason you don't get paid out because of exclusion or something. One of the examples is Hurricane Ian, right? So
Right.
there was a lot of damage that occurred in Hurricane Ian, but there was a lot of assumptions and news of people being a little bit incorrect in their filings, right?
Mhm.
And one example was that a building got a payout of $480,000. Before it got paid, they actually decided to readjust it. So they had already approved it once, and then said, "Actually, never mind. We sent someone out, and it doesn't look like $500,000 worth of damage." They ended up getting paid $13,000 in the end.
Oh, okay.
And something like 6% of the claims from Hurricane Ian, this was 2021, are still being processed.
Wow.
And that's because things are complicated. Sometimes if we go back to the NatCat example that I said, right, where a hill nearby was shooken up by an earthquake, and then that ends up pushing, into your building a couple weeks later. Earth movement versus earthquake. Something similar happens with when you're talking about like property damage and stuff like that. Let's say you live right beside a skyscraper or just like a 6-story building, and it falls and it hits your building. Technically, their building insurance needs to pay yours, because without their building falling on top, theoretically yours could have been safe,
Yeah.
right? So that's when you'll have like a policy on a policy, right? So some of those 6%, I'm assuming they don't really go into stuff that's still being deliberated, right?
Right.
But I'm assuming it's like a policy is relative to another policy that hasn't yet been sorted yet. And then, a certain community, let's say you live near an industrial thing that got completely destroyed. Now there's pollution to be included. Now there's, difficulty in terms of getting people to the site to actually fix it. And then those payouts are based on the payout of that big industrial site getting destroyed or not, right?
Okay. That makes more sense. Quick question about that actually. If say you stayed in the building that got taken down by the other building, and you yourself did not have insurance that covered this, would the other building's insurance still cover you?
Yeah.
Yeah?
Yeah. But now we're getting into like a knowledge type thing, right? You may
Yeah.
not know that they're actually liable for these damages, right? It's the same as, I think we talked about environmental insurance a while ago. I worked with environmental insurance, and that's very typically it's a storage container dripping onto your property, and then
Mhm.
it spills onto other people's property or ruins your property because it's been dripping slowly. Your neighbor may not know that that's ever happened, right? So it's kind of a thing of like who's involved in this. Typically, if once you get to courts, the courts will then be they'll go to the prosecution and say, you got to find co-defendants and stuff, and then they'll find you and say, by the way, did you know that you didn't have to pay for your house being fixed? These guys were actually the ones who had to fix it, right? And then they'll
Yeah.
ask you for receipts and stuff.
Okay.
Another example, and this is something that I heard personally working in the industry, was hotworks exclusions coming in and making a mess on mining claims. So a building on a mining site burned down, and it turns out that their policy had a hotworks exclusion, but it was never, they weren't aware of that. So when they did welding on their own property, they ended up having their building burned down. They go make a claim. Turns out that they're denied because of the exclusion, right? So this is the type of worst case scenario that we see with these types of claims, is that it turns out, and there's some examples of this where this ends up screwing people over later on. And there's some examples of this where they actually went to court and they were able to get this overturned. But most times exclusions are pretty cut and dry. The typical case, though, is a 13 to 45 day period, right? You got an adjuster who comes and he figures out, is this stuff worth the stuff, the what you said it was? Do you have receipts for these things? They'll do some sort of inspection, right? You come to your burnt down building. They'll say, yes, it is burnt. Yes, the stuff that he said, I can see, he said his TV got destroyed and I can see that there's a melted TV here. Makes sense. They'll then negotiate in terms of, can they source some of these things, right? Like there's this very classic piece of advice that you'll see online when it comes to your house is burnt down, right? And that's, you submit your claim and you have this long list of things that you had. If you say you had a 55-inch TV, they will go to Walmart and they will get the cheapest 55-inch TV and they will put that as the value, right? But if you said I had a Samsung OLED 55-inch TV from 2024, they'll then have to go find that specific TV or that specific model and then fit based on that. And they would have to, that might be worth more than a random Roku flat screen TV.
Yeah, of course. Yeah.
Right. So this is kind of jumping ahead a little bit, but like one of the things that you really, in any claim situation, if you're listening to this and you're trying to learn about claims in God forbid, a situation that's relevant to you specifically, documentation is key, right? And this is not just for personal insurance. This is also for corporate insurance, right? Like if you say you have an excavator worth $75,000, it's a very specific one. It attaches to all your equipment. You really got to put the make and model in there, right? And you really got to make it clear why you have this specific excavator or why you have this specific TV, right?
Right.
But those are the three high-level cases, right? When you think of claims, the AI one is obviously, this is new. This is something that happened in 2024, right? This is the idea of getting your claim paid out on a claims-based type policy, so not parametric immediately.
Yeah.
It's kind of insane.
Yeah. I mean, when I think of claims, I think, why do claims take so long? Why, like, what is actually the process behind it? And like you mentioned before, at the start of the episode, actually, there were so many claims that are yet to be paid out from Hurricane Ian, right? So what takes so long in this process, and why has it taken so many years?
Yeah, I mean, do you know the movie The Invention of Lying?
I've seen a few clips of it, but I haven't actually watched the movie.
Yeah, it's the one with Ricky Gervais, right? And I think it's a great example of this, because the problem is that with any good system in the world, there are going to be bad actors, right? And for pretty much as long as there's been insurance fraud. So if we could assume that no one would ever lie, I'm sure claims would be way faster, right? If people were not capable of lying and they couldn't go to their insurance company and say, hey, my car got crashed, and in reality they drove it into a tree, or they set fire to their own car because they don't want to pay the loan on it or whatever, then these processes would be a lot faster. But when we go back to that typical case, we got the adjuster, we got the inspection, we got the negotiation, we got the settlement, right? There are so many different people who have to get involved with this process just to ensure that you're not lying, right? And the average person wouldn't lie on an insurance fraud. But can you imagine how much your insurance premium would be if they paid out every single liar, right? Like all of a sudden you're subsidizing other people's lying, and then you would start to slowly feel incentivized to lie, right? Everyone else is lying. Everyone else is getting a brand new, they're getting the Samsung instead of the cheap Roku because they put Samsung instead of Roku when they only owned a Roku.
Yeah.
Why don't I do that, right? And then you end up understanding, okay, well, I understand why there is this claims process, right? It's not optimal. There are innovations being made. On the technology kind of fronts, I saw an article that Swiss Re has now process something like 40,000 claims using AI. So automatically, none of these people are involved, right? There is still that bucketing, I'm sure, right? Once it hits a certain threshold, we're going to get some eyes on this But for like smaller claims, things like this, I do think we'll start to see AI come more in. The Lemonade AI example, if I'm recalling correctly, they have like an app where they actually like you're talking to it
Right.
and it detects in your face, are you lying, right? Like, I mean,
And
how good could that be? But
oh,
still,
okay.
but
So
still.
it really depends on that, like your facial expressions and how you react to it.
I don't think it fully depends on that, but whether it gives you a 2 second claim or if it sends it to someone just to double check everything, I
Yeah.
think does depend on these kinds of things, right?
Okay.
Claims is hundreds of small factors and decisions. I think I talked about this when we were talking about the car, right?
Mhm.
Like you start with one decision matrix and you keep making decision matrices until the answer is we're not going to give a claim or we are going to give or pay out this claim,
Yeah.
right? Um, and I think as we start to see AI come in more, I mean, it's AI in insurance is always, we'll have a whole technology episode. We'll have lots of technology episodes, I think, because the whole concept of AI in insurance is a little bit black box worry, right? In terms of not only like how do we set the price, like what if it starts considering your, your race, all these kinds of protected classes.
Mhm.
But that same process could also happen in claims, right? If it also says, well, okay, people from your specific area are more likely to make
Lie.
fraudulent insurance claims, right? Like, well, is that really fair? Like, I'm sure that people are already doing this, even subconsciously or consciously. But yeah, technology goes even further than AI because we're starting to see drones and satellites, right? In terms of someone's house insurance goes up, they're asking for a new picture of their roof, right? It's a new company. They decide to send an old picture of your roof, right?
Mhm.
So they sent one from 5 years ago when the roof looked great, but now it's 5 years later and they haven't done any roof maintenance. But they submit that old picture. Once again, this is insurance fraud. But now they can use a satellite to look at the picture of your roof and say, "Well, wait a minute, right? This isn't quite what you said it was,
Yeah.
right?" Do you feel like that's an invasion of your privacy?
Um, I, I don't think it is an invasion of your privacy if it comes to claims payouts because you kind of have to get this information, right?
Mm.
And I I don't know, do people consent to this, like, or is it a part of the contract that they can see your rooftop using satellites?
Well, I mean, you could go on Google Earth right now and you
Yeah.
could see a picture of your roof from a satellite.
Yeah, but I guess the whole insurance payout for like claims, you even if it's not in the contract, you kind of understand that these people do need to see whether you're lying or not in order to pay you out for these claims.
Yeah, yeah,
S-
but I mean, it's there's like a classic movie trope of this guy who he works on a construction site and he hurts his leg, so he puts it in a cask. Oh my god, a cast,
Cast.
because he's worried that some insurance adjuster will come with the binoculars and see him walking around and partying, and he'll get his thing retroactively denied,
Mhm.
right? So there is this kind of little bit of private investigator feel with these insurance adjusters, right?
Yeah.
And then you have to consider what if they did break their leg and all of a sudden they're getting tracked down by this guy who's following them around and
Yeah, I mean, I guess there is a sort of fine line in between invasion of privacy and what insurers can actually take a look at without you knowing.
yeah,
But
because it goes one step further. We got the satellites, which is like, satellites aren't like Dr. Evil satellites where there's a guy who just zooms in and he can live see, right? It's pictures like a process stitched together. It's not like we have one really big camera. There's hundreds of cameras up there stitching with software.
yeah,
But now there are some insurance companies that will immediately send a drone out. Or if they need to do an inspection, they will send a drone out.
really?
They won't even come visit you. They'll park outside, they'll send a drone out, they'll go over your property, and then they'll take it back and they have all that data.
Wow.
And now we're starting to feel it's starting to feel a little bit weird, right? And
Mhm.
it's in reality it's the same thing. It's used for the same processes, but very quickly I feel like this use of technology can, I mean, I think I talked about this ages ago, right? Like, let's say you had a car crash and your phone data could be brought in to say, yes, he was at this location, but he was going pretty quickly from point to point. Maybe he's at fault here,
Mhm.
right? And right now, obviously, the company would have to get your permission to use your phone data, but I feel like the whole permission aspect of gaining information on you is getting less and less, right? If you can send a drone, I can send a request to Apple. I'm pretty sure the police can send a request to Apple to sequester your data, and they have to, give it to them to figure out, are you at fault for a crime? Were you at a crime scene? Right. Yeah. Claims is getting scary, I think.
Yeah.
It's a little bit because there's there's that security theater aspect of it, right? There's this report that says that, I don't remember the exact number, but the TSA have actually never stopped any type of events, right? Knock on wood, thank God. But at the same time, there's the security theater aspect of it, which is people are less likely to try things if they know that there's security that could catch them, right? So what came first, the chicken or the egg? Did there come less people trying to get on flights and do bad things, or did the TSA through security theaters stop the same amount of people that would have done it before, right?
Yeah.
And it's kind of the same a little bit with this, right? Like, let's say that we get these automatic drones and your phone data is automatically taken, and they're able to collect all this information and piece together. There's this Futurama episode of this genius who can detect crimes before they occur, right? But let's say we could collect all these pieces of information. We got CCTV. We're in London, the most CCTV covered place. You can't fake a car crash here, right? There's cops, there's CCTV. They could send a drone to your location. They check your phone data. At a certain point, lying in a claim becomes impossible.
Yeah.
And then the need for all these things to check whether you're lying is reduced, because now the chance of a claim coming in not being fraud is so much higher, right? Because there's this like security theater aspect of it, right? They still need to do the security theater, but the value of the security theater actually drops the more people believe in the security theater. I don't really have a point here. I'm just trying to say that it's interesting how these technologies are going to bring us closer to a place where claims are more streamlined, and therefore culturally make the necessity for streamlined claims less important.
Yeah. Sorry. I don't want to put you on point here, but do you have any wild examples of such insurance frauds, like people claiming something that they haven't done? And I don't know, it could be real, it could be rumored.
For today about claims, no, I don't actually have any. Like, I not to pull the exact same thing I did to Mo a couple of weeks ago, but I think we could pretty much do a whole episode on insurance fraud. Because it's also typically, what's interesting is insurance fraud also overlaps many other types of fraud, right? Like, let's say, if you breach your duty as a director, for example, that could be seen as financial fraud, wire fraud, all these kinds of things. But then you also have directors and officers insurance that explicitly states that you're acting in the best interests of your company, and therefore it's also insurance fraud, right? So it ends up being, one of these things. When we're talking on a personal example, there's just so many, right? You brought one up last week the week before that, of the guy with the car, and he sent a picture that was on his Instagram and the car was fine, right?
Yeah.
But we do have a lot of different types of examples today. The first one I'm going to talk about is Merck. Give me just a second here, because this is a really, really interesting example. Actually, I need to stop moving out of the way. So Merck is a pharmaceutical company. Do you know this company?
No, I haven't heard of it.
It's actually quite large. MERCK. Yeah, it's a German pharmaceutical company. Anywho, in 2017, they got hit by the NotPetya malware, which was attributed to a Russian military intelligence group that was targeting Ukraine in many different ways. Merck has, civilian infrastructure in Ukraine. They got pharmaceutical plants. They got logistics hubs. And this was a malware attack that was trying to damage Ukraine, right, in any way possible.
Yeah.
So something like 40,000 computers got infected in 90 seconds, 24,000 laptops, 1,700 servers. It completely crippled their manufacturing, vaccine production, leading to 1.4 billion in losses from a cyber attack, right? We talked about cyber attacks, but this is a really, really big one. Yeah. This was really quite an interesting insurance, because they actually had an all-risk property insurance with they had a huge insurance like tower, 30 different insurance companies, and they filed a $700 million claim. However, companies like AIG and Zurich actually denied it because of a war exclusion, right? And typically war is not covered by insurance, right?
Mhm.
Because if war was covered by insurance, that's a really good way to make insurance go bankrupt. It's also a really good way of, making insurance fraud on a state level.
Yeah.
But they said that this was not covered because this was considered an act of war. However, this exclusion was written before cyber insurance was really big, right? Merck had just renewed the same insurance tower over and over again, and it was a rather old, definition of war. And they ended up going to court, and in 2022, a New Jersey Superior Court, I don't know why specifically New Jersey, maybe the insurance company AIG is based out of New Jersey or something, actually ruled that this specific exclusion did not cover cyber attacks, and also that all this stuff was civilian infrastructure. This wasn't military infrastructure. It wasn't government infrastructure. It was a company in Ukraine that got affected by an act of war.
Yeah.
And this actually led to a lot of changes. They ended up getting it paid out. But it led to a lot of changes where Lloyd's of London actually mandated explicit cyber war exclusion. So now every single policy has to have a war exclusion and a cyber war exclusion. Policies must also state whether nation state attacks or nation-like. So the thing is, NotPetya is a hacker group which is supposedly separate, but everyone kind of knows it's Russian-based. But this is one of those examples of a claim getting denied based on an exclusion, similar to that HotWorks thing that I was talking about. And they end up taking it to court the whole way, and they end up getting, that claim paid out in the end.
Yeah.
Kind of a crazy situation when you think about it. And it also sets a precedent that if there's an old policy that's being consistently renewed that didn't have that new cyber thing added to it, they're technically also eligible for a payout now, because now there's precedence within this case, right? So if they get renewed and they get a new policy, yes, but if they get the same policy continuously renewed since pre-17, they could be paid out for something like this.
Yeah. I find it pretty interesting that that now we have cyber war exclusions, right? So we are really in the day and age of where these big hacker groups, they could eventually take down a country or a city this size, right?
Yeah.
And you spoke about how war could make insurance companies go bankrupt. Did you know that the 2008 financial collapse, do you know how much the payouts were for that in total?
Insurance-wise?
Yeah. Around 15.4 trillion pounds in total.
Damn.
That's more than the GDP of the United States.
Damn.
Yeah. That is crazy, right?
Yeah, these payouts can get absolutely huge.
And a lot of these insurance firms, firstly, went bankrupt. Second, a lot of them are still paying it out to this day.
Damn.
Yeah.
Damn. But there's also, I think that there's clawback for some of this as well. And I think a lot of this was probably written off in terms of, you lost this amount, I lost that amount, we're just going to cancel this out. Because, then there's the other side of these things. Some insurance company may want to take a fat loss like this on the books, so they have a huge tax deduction moving forward, right? In terms of like, these are the costs of operation, 15 trillion for us to make 1 billion in profit. Okay, cool. No taxes there.
Yeah.
But I think a lot of this was probably written off or was covered by the government. I know in 2008, the US government came in and, they saved like Fannie Mac and all these kinds of companies. And actually, speaking of this, and this is kind of unrelated, there's other examples I want to talk to today, but I saw an article completely unrelated to this, that some companies that bought these default mortgages back in 2008, right? The original bank decided to just write it off. We're not going to look at this. Then a couple of years later, they decided to sell it. The property was actually sold multiple times since then. Then went back and enforced their original mortgages that they bought and are taking over people's companies that they bought from banks in 2008 because the bank actually sold the mortgage and didn't have the right to resell it to recuperate.
That is insane.
And now we're getting it's crazy what these like types of situations can lead to, these corporate, long-term ignorance situations. Another really interesting example, sticking on the cyber topic, is Hamilton, Ontario. So I lived in Ontario. I lived in Toronto. Hamilton is a town there. It's not the biggest town in the world, but it's a town there. and they had a cyber hack as well, leading to damages of like $18.3 million, right? So relatively big cyber hack.
Yeah.
They got paid out $100,000 because they never turned on their multi-factor authentication. So this is one of the, and this will lead to something like I have other examples that are similar to this, but not quite the exact same. But this, like, read your policies, because there will be things on there that say you have to do X, you have to do Y, you have to do Z.
Yeah.
And if you don't do them, you will get canceled, right?
Yeah.
You won't get that claim paid out.
Of course, yeah.
And this is now that, stick with that idea, right? You need these kinds of things, right? There are two examples that I find equally crazy. I think one of them you'll find really like shocking to be true. Start with the less shocking one. So in 2021, I don't know if you remember this, there was that whole Ted Cruz flees to Cancun type thing during the Texas freeze, the 2021 Texas freeze. And oh God, I don't have the number written down anywhere, but I do have the number written down right here, actually. Economic damage reached $195 billion. 246 people died, and 450,000 insurance claims were filed. It was crazy, right? Because it's not a state made for a freeze.
Yeah.
60% of these claims were denied due to a clause called maintenance.
Okay.
So these property owners, these different places, they have to maintain things and have records of maintaining these things. And one of those things is snow maintenance in a place like Texas.
Mm-hmm.
So obviously every other year this never had any impact. But let's say we go back to the roof example. Let's say you live in a very snowy place and you never clear the snow off. Eventually it will get so thick and so heavy that it will crash through your roof.
Yeah.
You will not get paid out for that because you never cleared the snow off your roof. Similar clauses were used in Texas, a place where it never snows, but they had standardized policies that are equal to places that do have snow. And because they didn't do proper maintenance, like turning off their taps, things like that, when it gets under, their water line freezes and bursts, they don't get paid out. And now we're really like, it's interesting because it's very quick to be like, oh, boo Texas. It's also very quick to be like, okay, well, maintenance is a normal thing, but it's also understandable if you live in a place where you never have to do winter maintenance to then get your insurance policy denied that year for lack of winter maintenance. Because let's say nothing happens to your house. Next summer, your roof caves down for a completely different reason. You get paid out. The thing is, you never did winter maintenance. Do you now have to do winter maintenance even when winter doesn't hit you because your policy says if winter maintenance?
Yeah, that's what I was going to ask you, but apparently it does.
Yeah, apparently it does. Yeah. I think it's quite, so this is things like claiming that pipes were corroded, the fact that failure to protect. So, if you see a fire coming or you let's say a fire starts on your stove and it's very small and you decide to run out of the house instead of pat it out and then it burns down the house, you failed to protect your house, right? Mm-hmm. But now they're saying that they failed to protect because they didn't keep the heat on even when the power was out. They didn't insulate their pipes in Texas, where this is a problem one time every 50 years.
Yeah.
They normal wear and tear because you had a policy for this long. And if you spread the amount of snow damage across the entire time of the policy, it's technically normal wear and tear. A lot of really crazy situations. But it's also because you go to let's say you live in Texas, you're looking at insurance. You can get one for $1,000 a month or one for $2,000 a month. The one for $1,000 a month excludes winter damage. And you've lived in Texas. There's been one snowstorm. It wasn't so bad. So you get the cheaper one, mm-hmm. right? But in reality, maybe that more expensive one was the right one. And then it's really, okay, consequence of your own action. I don't know.
Yeah, I guess so. I mean, this takes us back to the example from our first ever episode, where we spoke about Wimbledon, right? You brought it up, I think. Wimbledon was paid out, how much was it? About
140 million pounds?
Yeah, 140 million pounds for the pandemic. And it was the only company that did, right?
Well, it's the only one that got event-related pandemic insurance.
Yeah. So my question to you is this: how do you convince, or how do you tell people to buy coverage for such events? Such as the pandemic. Because I suppose the premiums on that would also be quite a lot, right? Pretty high.
Yeah, I think they were paying a couple million a year for that,
Yeah.
and they paid it for 20 years before anything happened. Yeah, I mean, so there's this book. It's one of my favorite books actually, called The Black Swan, and it refers to this idea that for a long, long time, we had never seen a black swan. So you could go around saying black swans don't exist, right? But then the British colonialists, they went to Australia. What did they find? Indigenous people. What did they claim they discovered? A black swan in Australia. And all of a sudden, you're in this situation where this idea that black swans could not occur have occurred.
Yeah.
And it's very easy to say in hindsight. It's very easy to, come up with a plan moving forward, but you can't rediscover the black swan. There is now a new black swan out there, right? In terms of, so in this case, the black swan represents a risk event,
Mhm.
right? And it's very hard for you to imagine risk events that you don't have any example for, right? And it's the exact same way. This applies itself a lot in insurance. So the same way that actuaries don't, aren't able to price emerging markets like we talked about because they don't have any examples to look at. They don't know what the potential risks could be. You don't know that there's a black swan event out there. And I wouldn't even necessarily call the pandemic a black swan event. I think it was a outlier event at a very, very massive scale. But we had SARS, we had, pig flu, bird flu, right?
Yeah.
It just didn't quite get to the same level as the coronavirus did. But if we ignore that and we say that because of the scale, it's actually different from SARS, it's different from bird flu and pig flu, and we call the pandemic a black swan event, moving forward, we know what we need. There are probably a lot of event companies, Ticketmaster, UEFA, whatever, who are now Premier League, who are now getting pandemic insurance, right?
Mhm.
The problem with that is that the world around us has changed, right? How insurance companies are insuring things like the pandemic has changed.
Yeah.
It's going to be different. It's going to be, is this coronavirus 2 and therefore it was already covered by your old one and we don't do that twice? Or is this a whole new type of virus that's going to come out in the future? Right?
Yeah.
I think the real black swan event right now is let's say like a meteor or like an alien shows up, right? Yes, it could be possible. I'm not going to make a statement on whether aliens are real, but like a meteor hitting Earth, right? We know it's possible. So similar to coronavirus, we know that these kinds of pandemics can occur. We looked at the Black Death. We can compare that to the coronavirus. We looked at what killed the dinosaurs, and there's also been smaller meteors since then that had no impact, but some could have huge impact.
Right.
But how do we ensure that?
Yeah.
We
don't know.
Is it worth thinking over? Really? Yes, Wimbledon got this right? But when was Wimbledon started? First event. 1877.
Wow. That is way earlier than I imagined it would be.
Yeah, I would have said like 1930s or something,
yeah.
1920s. Anywho, 1877. Let's say that they had somehow managed to get pandemic insurance since then.
Mm-hmm.
Right? Obviously, in his first couple of years, 22 men saw 200 spectators. Okay. Not quite the same scale.
Yeah.
But let's say that they had gotten it. The first championship was televised in 1937. We'll go with that one because if it's televised, it's big enough for people to care about.
Yeah.
But that's almost 100 years they would have had to pay, 83 years that they would have to pay
Pandemic
insurance. And at that point, they would not have been positive, right? They had been paying for 20 years, a couple million a year. They got their events thing stuff, and even they were able to recuperate their investment within pandemic insurance. But if the coronavirus happened 20 years later, they would have paid more than the payout.
Mm-hmm.
And then the idea is, okay, well, I could have put all this money into an index fund, right? But then the problem is that the value of your index funds also falls when a meteor hits or the pandemic hits.
Yeah.
So in reality, is there and then that's kind of what the book kind of goes about. Are there strategies to think about these black swan events? And if there are they worth it?
Okay.
It's an interest. I mean, it's incredibly interesting to think about.
Yeah.
But this last example, I think, is going to drive you up the wall.
Okay.
Because I wouldn't be surprised if you have this insurance, or maybe you don't. You have Apple Care.
No, I don't.
Oh,
I mean,
bad boy.
Mine expired.
Okay, yeah.
Yeah.
Fair. You want to hear something crazy
Let's
about
hear it.
AppleCare?
Let's hear it.
So AppleCare, how it works is that they're not actually insuring everything yourself. They have, they work with partners in different regions to provide the actual insurance part of AppleCare, right? But when you send your phone to get fixed, they tell you they're going to turn off Find My Phone, right? Because they don't want you to figure out, who they're contracting to, or they don't want you to show up at the technician's office and be like, give me my phone back, right? So they have you turn off AppleCare, then take, Find My Phone. AppleCare theft recovery, the line in it says, you may not turn off your Find My Phone ever during the coverage policy, otherwise you'll be denied. So let's say, start of the year, get a new phone, drop it on his screen. Oh, dang, I'm going to go call AppleCare. They're going to take it. They're going to turn off Find My Phone. You then bring it back. You turn it back on. You go about your day. It gets pickpocketed. You call AppleCare. I want, my theft protection to come into play here. And they say no, because you turned off Find My Phone. It was on when it got stolen, but it was off at one point during the coverage period.
I did not know about that. And that is actually crazy, because if Apple themselves ask you to turn it off while they're fixing your phone, shouldn't that be an exclusion to this policy?
I mean,
it should, but it isn't.
I have a feeling that this is a type of scenario that doesn't actually happen that often. I think AppleCare has been a fantastic venture for Apple, because people don't actually, like, everyone likes to talk about their phone getting stolen, especially here in London, right? Those bike thieves coming. But it actually doesn't happen that often. And a lot of people who get AppleCare will probably never make a claim or never get their phone stolen, and then they'll just buy a new one eventually. And then same thing repeats. But I have a feeling that this situation doesn't actually happen all that often. They don't always have to turn off your phone. It's if it's battery related, they got to send it somewhere. But if it's a screen, they can do a screen repair locally type thing. They probably just keep it off the whole time. But if they have to test things, it's different. And then people probably go get things replaced themselves cheaper, right? Like, you can go to your local mini mall and find a phone repair dude who does this stuff. But it is interesting, because Apple probably, they know you have AppleCare, and they could probably make a pop-up that says, hey, if you turn this off, and it gets stolen, there's a problem here. I think it just doesn't happen that often. I think it changes on jurisdiction a little bit. Different places have different rights about looking at this data.
London should have a whole different policy for that then.
Yeah, no, 100%, 100%. But I thought that was a really, really interesting, like, catch-22 there. And this...
It is.
It's I'm trying to think if there's any other, like, examples of something similar to this. I just kind of bringing it back a little bit to that cyber war exclusion a little bit, right? Where does this barrier kind of stop? Because there's one thing, there's these state actor hacker groups, but if some random dude in Russia hacks me, calls himself Petro hacker, I don't know why that's relevant. He calls himself something random. He says he's in a hacker group. He hacks me. Am I not eligible because he's from Russia, or because he says he works with the government? Why are we trusting a hacker on this? He's already trying to screw me over. Who knows he's not trying to screw me over twice?
Yeah. Is this a cyber war? Like, does that become then a part of cyber war exclusion?
Yeah, and then I guess it differs. Let's say I make a statement about Ukraine, right?
Yeah.
A pro-Ukraine statement, and then they decide to hack me, versus they just decided to hack me because they weren't actually affiliated. But there's all these kinds of situations, and I feel like it can get very out of scope really quickly, right? Like, this iPhone example feels like something... Because obviously it's and we've gone through this, it's the policyholder's responsibility to look through their policy, read, understand what is going on here. But at the same time, I don't think Apple should be able to sell you a policy that they breach on your behalf. Right? That's like, the insurance company says, oh, don't let strangers into your house. And then they send an insurance inspector over. He walks in, you're breached.
Yeah,
I'm a stranger. You didn't even ask me my name.
Yeah, that's really messed up.
Right?
Yeah.
It's interesting. It's interesting. There was one last thing. We're actually running out of we're running out of time here, but there was actually one more thing that I kind of wanted to touch on. It's really not that important, I don't think. Anything you want to bring up? Oh, actually, I found it. Anything you want to bring up though?
Yeah, I mean, we could probably fit this in. I'm not too sure, but all this while we've been looking at claims processes from the client side. Um, we did speak about the insurer side a bit, but I'll kind of narrow it down. So if you were an insurer and you had to change one thing about the claims process, that would make life way easier for you, what would it be and why?
Mandate every person to have those Meta Ray-Bans with the cameras on at all times,
Yeah.
constantly live streaming to the insurance company.
I think that's a great idea. I think that's a great idea. I want one. Like I've been wanting one for a while.
Okay, this is a great thought. This is actually a great way to end today's podcast
Okay.
with a little bit of a thought experiment.
Right.
You don't have to give your final answer. We'll touch on it at the start of the next one.
Cool.
Would you, so you get a free pair of Meta Ray-Bans.
Mm-hmm.
In fact, you will get a new one every single time they release a new version, right?
Okay.
You do have to give back the old one. You don't get
Yeah.
a big collection, but you will constantly have the most up-to-date Meta Ray-Ban,
Mhm.
right? And it will, everything it records is encrypted with your login, right? So it's the same, it's connected to you, it's yours. You can use it for whatever the hell. Do you know what shadow play is?
No.
So shadow is completely unrelated. Shadow play is related to something NVIDIA created for video gaming, right? So it's
Okay.
this thing that you can click record, and what it does is it actually was recording the entire time, 5 minutes back, but it deletes as you continue, right? So you don't fill up on storage, but that means that like if you record after something cool happened,
Yeah.
it then starts 5 minutes before, and you capture that cool thing,
Okay.
right?
Okay.
But these Meta glasses have 1 week of shadow play. And if you make a claim, or if you have to go to the doctor, or if you're sick and you got to get a doctor's note or whatever the hell, your insurance company, your health insurance company can shadow play your last week.
Mm-hmm.
Would you accept this? And if the claim occurs when your glasses aren't on, so it's not like you can just have it and use it when you want to. If the claim happens when the glasses aren't on, there's no way of it getting approved.
Okay. And I mean, do I need to answer right now, or
No, I mean, you can have a couple thoughts. You don't have to give your final answer. You can also
Okay.
change your answer before next time.
Okay, so they can take a look at everything that I've done in the last week, and I need to keep these on 24/7.
Well, you got to keep them on like a person who wears glasses would have glasses, right? You don't keep them
Okay.
on in bed type thing.
Yeah. That is quite interesting because again, this becomes a whole topic of invasion of privacy and
And then if we take it one step further, they will also give you an Apple Watch and an iPhone. But once again, the data is provided to them. And this is only when you make a claim.
Yeah.
This is not like a guy out there has access to it. Oh, let me just check what Harsh is up to.
Mhm.
But if you've made a claim, health insurance wise, life insurance, fucking house insurance, anything,
yeah.
all that information becomes available for purview.
Now you're just spoiling me, but maybe. Yeah, I mean, as long as they don't have access, I mean, they have access to it, but they don't check it 24/7, do they?
No. So, and this is probably where most people would get caught up. But like the way I'm thinking about it is that like you have an app, and when you file a claim, that creates an encryption code that allows them to unlock the last week.
Okay.
Right. So they literally cannot access it even if they wanted to until you make a claim, because your phone has the other hash key.
Right. I mean, okay, my answer is yes.
For the trio.
Yeah, I would let them.
All right. Well, I'm not going to give an answer until next time, and we'll see if your answer changes at all. So take some time to think about it.
Yeah.
If you guys have any thoughts on this, right? Would you accept free smartwatch, free Meta Ray-Bans, and a free iPhone, but I think we can make this situation a little bit different, because right now we're just thinking about it from an insurance lens, right? Your insurance premium would be nothing, right?
Mhm.
Like it would be super, super cheap. You're getting all these things included, right? Um, yeah.
Yeah. So would you get the Ray-Ban Meta glasses, the iPhone, and an Apple Watch? But when you submit a claim, the insurers can take a look at whatever you've done in the last week. Obviously, it's encrypted and you provide them with the password. But would you? That's the question, right? Yeah.
This has been Coverage and Coffee. My name is Caspar Harsey,
My name is Harsh Chandani.
and we'll catch you next time.
See you.
Thank you.